We have a question paper that we have for November 2024, and we are going to look at a question from paper two. So our question is on cost accounting. Question consists of 35 marks and requires you to spend on average 35 minutes. So the question is on flower pots manufacturers, and the business manufactures large concrete flower pots. And their financial year ended on 29 February 2024. Well, the required part, first, first part 4.1.1, refer to information A, calculate the raw or direct material costs with formats. So we can as well go to our information A and try to calculate our direct or raw material cost. So going down, I would say that this is our information A, where we have our direct or raw material costs. And it reads, the business uses a high quality concrete mix to make the pots. So the production requirements, 4,800 units were produced and sold during the year. Each complete pot requires 1.4 packets of direct material. So very important that each complete pot, which is going to be 1 unit, consists of 1.4 packets of direct materials. So next point, the business allows for wastage of 10% of direct material. In brackets, concrete mix. The cost price of concrete mix was maintained at 125 rands per packet for the financial year. So that's what we have. So it means each of the packets is 125 rands. And then I'll also take note of the wastage. And remember, we want to calculate direct material costs. So it means the material inside the units are produced would have lost 10%. So it means this is going to be 100%, and then we add the 10% wastage. So it's going to be 110% that we want. So we make a proportionate calculation. So basically, that's what we have on that part. On the calculation, we are going to have our 4,800 units, and then we multiply by 110% so that we get the units before losing the 10%. So we go to our other section, whereby we have our 4.1.1. So basically we have our 4,800 units, and then we multiply by 1.1. Remember, this 1.1, we are taking it from the 110% is a decimal. We divide by 100, so it becomes 1.1. And remember, we discovered that there was a 10% that was lost that we want to take into account and uh, include it so that we get the material before the production. So we multiply there and see what we get. And then if you multiply by 1.1, then you multiply by the 125 rands per unit that we are given, 125 per packet, so that we can get the amount. So having that, we also know that we have got 1.4 packets inside each unit. So it means we are also going to multiply here by 1.4. Multiply also by 1.4, then you multiply by 125. So we calculate it as such and see the answer that we get from there. So the answer that we are supposed to get here would be 924 rands. 924,000 rands. So we are saying 924,000 rands. So that becomes your. So moving on to the second part of the question, it reads, calculate the direct labor costs and we refer to information B. So we want to see, according to information B, what is the direct labor cost. So we need to calculate direct labor cost. So we're given direct labor budget for the year amounted to 1,117,200. And then we're given the business is 7 direct workers. Each worker is required to work is required to work 1,680 hours per year and is paid the same hour rate. So we need to calculate the hourly rates according to budgeted information so that we can be able to calculate uh, the actual direct labor according to actual hours worked. So we can calculate the hourly rates whereby we are given the total budgeted direct labor costs is 1,170,200. So when you to say 1,170,200, then we divide by the number of budgeted number of hours. So when you say each worker is required to work 1,680 hours, of which we have got 7 direct workers. So it means we are going to multiply the two to get the total budgeted number of hours. Then we divide into the total cost. So our denominator is going to be 1,680 times 7. So we further present it and see what we get there on the in the denominator. So let's just try to multiply 1,680 and then multiply by 7. We are going to get you 11,760. And then we divide 1,170,200 divided by 11,760. And you're going to get your hourly rate to be 95 rands. So this is the hour rate that we are going to use in the second part where we have got the actual information. So if you come here, you're told that 1 week resigned on 31 October 2023. This worker did not work overtime. So we already know that this worker resigned on 31 October. Remember, our year is ending. Go to the beginning of the question is that our year is ending February 2024. Ended February 2024. And this worker resigned on 31 October 2023. So it means November, January, February. So November, December, January, February. So we've got 4 months. That this worker did not work for the current year. So we have to remove those 4 months. So in our calculation, we are now going to say so we have 4 months not worked, so we need to reduce those 4 months so we can come up with our calculation whereby we can present it in the form of a table. Whereby we are saying budgeted direct labor costs, budgeted direct labor costs for the year. We are given it here is 1,117,200. So this is the total that we have. Then from there, we are supposed to subtract the number of hours that we are not worked, uh, the number of months that we are not worked. Remember, we have got 4 months that wasn't worked by the worker who resigned in October 2023. So we're saying from November to February, we've got 4 months. So this 4 months was not worked. Uh, so we are going to calculate the total number of months that are supposed to be there. And remember, we have got seven direct workers, of which each year has got 12 months that are going to apply to each and every worker. So total number of months is going to 7 times 12. And if you multiply the year, you're going to get to 84. So we are going to say 4 over 84 to remove the cost of a number of months that we are not worked by the resigned worker. So we come here, we now say uh, resigned worker, and did not work did not work 4 months out of the total months that are supposed to be there, it's 84. And then we multiply by 1,117,200. Close our brackets to see uh, the amount, which is going to be 53,200. So we 53,200. And then we're going to subtract this cost, since this cost is not supposed to be part of it, since the number of months we are not worked. So in that case, we now calculate the overtime that was not accounted for. So if you come here, you would see that we have got overtime that was not accounted for. Three of the direct workers were required to work overtime of 60 hours each during the year. Overtime rate is 1.6 times the hour rate. So basically, we are going to say three workers with 60 hours each. So we're going to say 60 times 3. And then obviously we multiply by the rate that we have. Which is 95. We calculate the rate is 95. So we're going to multiply by 95 hours. And then also this rate for overtime is 1.6 times more. So we multiply by 1.6. And then that's how we're going to arrive to our answer. So we go to our answer section and summarize that way key, whereby we are saying overtime on brackets, we are saying if we refer back, you'd see that we said 60 times 3 will get you 180. So we're going to say 180, and then we multiply by 95, and then we multiply by the 1.6 increase, since it's overtime. Then if you multiply, you get 27,360. So that's what we have for that part. And we are supposed to add to get the total. So to get the total direct labor cost, we're going to say 1,117,200 minus 53,200 by plus 27,360. Then we get the total for direct labor costs, which is supposed to be 1,091,360. So this is the calculation that we had for calculation for direct labor costs. So this is what we have for this part of the question. We move on to the next part, which is going to be our 4.1.3. Refer to information C. Complete the factor overhead cost note. complete the factory overhead cost not. So our information C is where we have got an extract of pre-adjustment amounts on 20 February 2024. So we are told that the bookkeeper calculated the factor overhead cost is 1,132,700. So this is going to be at the starting point whereby we have got incorrect factor overhead of 1,132,700. Then from there we can now make the adjustments whereby we are given of salaries, advertising, rate of sales, department, property, bad debts. Then on the adjustments of factor overheads, we are told that the clerk was paid a salary of 9,200 per month, which was recorded as an administration cost. 20% must be allocated to the office and the rest to the production. So if 20% is to the office, then the rest to the production, and we have to say 100 minus 20. Uh, and then we get your 80%. So it means 80% is should be the one that is supposed to be allocated to the production. So we are told that is 10,200 per month. So for 12 months for the annual, we are saying so we're going to say 10,200 times 12. And we see what we get there. So if you multiply 10,200 and then you multiply by 12, we're going to get 110,400. So 80% of 110,400 is the one that is supposed to go to the production. So we go and summarize the working year, whereby we are going to see factor indirect labor. So in brackets, we are saying 80% is a decimal 0.8, then we multiply by 110,400. And then if you multiply, you're going to get 88,320. That's what we have for that part. And then we go to the next adjustment. So, right, we have the second point, which is rent of 156,000 rands was shared and recorded according to the following floor area by the bookkeeper. So we're given the floor area. So the one that we need is for the factor, whereby we're going to say 400 over total 600 times 126,000. Then, however, since the beginning of the financial year, the annual rent has increased to 157,500 rands as the size of the factor is increased. The bookkeeper did not consider the increased rate of 157,500 rands and the following adjusted floor areas. So we have got an adjustment in terms of the rent, whereby it has increased to 157,500, whereby the new floor areas will be given as follows. So for the factor, we're going to say 600 over 800 times 157,500 for the new. So basically, we want to adjust for the increase, which is going to change the rent. So we are going to say the allocation for the new minus the allocation for the old. Then we get the difference. We add it to our factor overhead cost. So we start by saying 600 over 800 times 157,500. So it can be we have now a factor render. Factor render, whereby we are going to say 600 over 800 600 over 800, then we multiply by 157,500. We subtract We subtract the old apportionment whereby we are saying 400 over 600 times 126,000. And then if you calculate it like that, you see that if you simplify it further, you're going to see that by saying 600 over 800 times 100 is 7,500, you are going to get your answer is. So you're going to see that the answer that you're supposed to get there is 180,125. And then if you calculate on this part, put 400 over 600 times 126,000, and you're going to get your answer is 84,000. So we subtract to 84,000. So if you do that, you see that the increase that we have is going to be 84,000. So you're going to see that the increase that we have here is going to be your, if you say 180,125 minus 84,000, you get 34,125. Then you can now add to get your net figure, whereby we are saying 1,132,700, and then you add your 88,320, then you add your 34,125, and then you are going to get a total is 1,255,145. So basically this becomes the total that we have. So this is what you guys are going to this video, and thank you for listening.